So, good evening, everyone. So, we started our class for today. I think so. The course of our last class, we initially discussed about the basic, the complex market structure, in which we talk about the other blocks. Is we've already treated rejection block and fair value gap before. So today we're talking about breaker blocks. Now, there's a reason why I didn't take this breaker block and the other block at the same time. All right. I want you guys to fully understand the other block before talking about the breaker block. Because the breaker block, if I to go by its definition and by its theory, is basically just an other block that has failed to hold. All right. A breaker block is basically just another block that has failed to hold. Please, if your mic is on mute, please mute your mic so that others will be able to hear me. Remember, I'm recording. So I'm going to share my screen right away. Let's get started with the rejection video breakout block. It's not going to be much of a thing, perhaps 15-20 minutes we're done. So now, what is a breakout block? A breakout block, just like I said earlier on, is basically an other block that has failed to hold. Take for instance, we have something like this. So take for instance, we have something like this. Now, price is coming back to this particular area. You should know that there's another, okay, let me just keep on drawing. So you know that price will be coming to this particular area. By virtue of you already know what another block is all about, you will know that there will be another block at this particular level. I most likely do what? Hold the market of a 10. But what happened? When price came back here, price did what? Price broke below that particular other block. So normally, if price is to come to this particular other block, what will happen? We do something like this. Then we push to the upside, right? This is the reaction you want to be expecting from an other block. But due to some reasons, price have done what? Price have broken below that particular other block. Now, that's where that name comes from, breaker block. An other block that price have done what? Have break. Just like this, that price have done what? Price have break this particular other block. And since price not break am, it is not regarded as a what? As a breaker block. And most times, price will most likely use it as most likely use it to do what? To continue pushing downward. All right. So this is the theory behind the breaker block of a 10. It's basically an other block that has failed to hold, but after price have broken it up, price will then use it to continue to the other direction. All right. Now, in the case of a this is the case of a bearish scenario. Then for a bullish scenario, this is what you should be expecting. So at this level, you already know that we have our supply zone here, right? But then what happened? When price came back, price pushed above that particular supply zone, breaking that supply zone. So what you want to be expecting now is a pullback to this particular other block that has failed to hold, and then price will then use that place to continue pushing upward. All right. So this is the idea or the concept behind the breaker block. Now, these particular concepts have also been used in many other distance. Take for instance, the breakout and retest. For those of you that know about breakout and retest, you most likely see this particular thing to be familiar, in which price will break out. This will be a resistance zone here. Then what will happen? Price will break out that resistance and pull back to do what? So this particular resistance zone again before pushing upward. But in SMC, if we regard that particular level as the what? As the breaker block, which is the other block that have done what? That has failed to hold. All right. So this is it for a breaker block. Now to identify a breaker block is nothing much. You know how to identify your other block already. All right. When you see a demand zone here, your normal red candle before the impulsive move. Now that red candle, once price break below that particular place and took out the full low, close below it, you will know that markets have shifted structure. And since market have shifted structure to the downside, you want to start looking for buy sells at that particular moment, and that's where you replace your sell position on the other block. So instead of you to buy before, now you will now be selling instead. So this is basically how you want to make use of the words of the breaker block. All right. The same thing goes for here as well. So with this being said, these are to make use of your words of your breaker block. Nothing much. All right. So think there's something I'm missing out that I'm supposed to tell you guys. I'm coming just a moment. Yes, the criteria remain the same. All right. You want to see your fair value gap, your this thing, impulsive move around here. Most likely a fair value gap around this particular level that the breaker block is. Then also you want to see your structure of a thing, which is your market structure shift or your break of structure. All right. Now, there's one criteria again that most likely make another block to be much more valid. That is to sweep. That means wherever your other block want to be, there should be a sweep. All right. The same thing goes for every other this thing before of a 10. Should be a sweep. Now, when it comes to what you should use between an order block and a breaker block, I will also tell you guys that should be a sweep of the previous level, which we get to understand more better in this thing in liquidity. Just like I said, validate, like to make your what we make your order block more valid. So remember in the analysis that you guys I won't be talking about what validate this thing yet, but I'm just showing you just in case. So this is basically what you want to, this is how you can identify your breaker block of it. So we'll just go over to the chart lab to go and look for examples of this particular breaker block. You have been in play over and over again and all that. So let's see. I've seen many, but those ones are most likely regarded to be advanced. Even currently, say price is relative from a breaker block of a 10. This is a demand zone, all right, that was supposed to hold. But what happened? Price did what? Price down break below this particular demand zone. All right. And then what happened when price came back to it? Price then use it as the point of interest to actually do what? So push down from. If I'm going to take this trade, placing my TP there with my stop loss resting just above it. That would have given me a 1:6, right? $100 will give you 20. Oh, $100 will give you $600. So over here again, you can see your other block. Sorry, is the white candle I wanted to pick, right? So this is your supply zone before, and what happened? When price came back to it, price broke it, and from there on, the market continued from that particular area as a 1:3, and as you can see, it pushed further. So if I was to put my TP here, I would have gotten a what? A 1:6 trade as well. Let's look for more examples before we call it a day here. So the other block, the breaker block, as you can see, is nothing much actually. Just know what you are looking for. You just want to see your, that means your other block that has failed. Then from there, you do what? You mark out your breaker block from there. This is supply zone. And price is actually used from that place to push higher. Again, that's a 1:6. That's a 1:4. Here's a supply zone. Now, we check properly, most likely see that there's a fair value gap in majority of them. Take for instance here, fair value gap as well. So over and over again, I've identified a lot already, but over here as well, there's also a breaker block here. We go back to the 5 minute time frame, we see a breaker block here that price after actually reacted from. and it pushed down to even hit its target. This one, I usually regard it as an advanced breaker block. If I was active on gold, this one trade I will most likely definitely not miss. This particular one, I will most likely definitely not miss it. It's a sweet trade. Here's a demand zone. And what happened? I see that price actually reacted from that demand zone and pushed downward. Giving us a 1:7. So, well, that's pretty much how many have identified. 1, 2, 3, 4, 5, 6, 7. So that's pretty much the whatever regarding market is still full. I think today is Friday. Okay, good. Closes 11 o'clock. Okay. So that's for that. That's everything you need to know about breaker blocks. This is basically how you can identify your breaker block. Basically, an other block that are done what that are fit to hold, and then that other block will then be used to do what to continue the market, all right, to the new direction that the markets have decided to face. Take for instance, in this particular supply zone, we're supposed to sell from here, but as price don't break up. Now, remember, as every other this thing, you want to be following the trend, all right? Because normally I already know that okay, this particular market is in an uptrend, so I'm not going to even think of selling from here. And as price break up, I most likely be expecting what price to use place as a what as a breaker block instead. But that does not mean that every place say price break, that go be breaker block. No. Take for instance, if market was actually in a downtrend and such a thing happen, you can't decide to go sell from here to go buy from here. Price go still do it, eat your SL for that buy, then push to the downside. So you want to make sure that you're in line with the trend. If you're not in line with the trend, then you already did a set trap for yourself. All right. So that will be all regarding this breaker block of the thing. Please go and make your this thing, go and practice it over and over again before back test it before you start using it in your live chats and all that. So that will be all regarding today's class. There's even another breaker block here. So but this only pushed price in this particular level because it was against the trend. So any question regarding the regarding today's class?
Boss,
Yeah, can you hear you?
what's validate and breaker block?
Like I said, we're not doing anything validating until we're done with liquidity. That's when we start validating our points of interest. For now, we only want to identify them. All right. Validation, that will be after we're done with liquidity basics.
Okay, sir.
When we start talking about advanced market mechanics. All right. So, any other question? All right, then, absence of no question, that will be the end for our today's class.